Welcome back to Mortgage Q&A with AJ. Today we will be talking about when is it a good time to pay points. What are points?
Wow. I'm sure everyone has been wondering what points are. We've talked about it in every episode almost.
You've been dangling the carrot
of
points.
All right. So points, it's very basic, right? It is a percentage of your loan amount that you're deciding to pay to get a lower rate. So for example, every day the market, there's a bunch of different interest rates, right? It can be from, say right now it's from 2%, on a 30-year fix, it's from 2% all the way to 3.5%, right? Every lender has this scale. The difference is what are you paying for that? Again, as I talked about with your shoes, if you can get it for $100 one place, but they're $2,000, why would you not buy it for $100, right? So because mortgage brokers and banks, they make money off doing your transaction, there's an amount that you're deciding to pay, that you're paying for it. Now that's the start. So say my interest rate is 2.75, and that's at 0 points. That means you paid nothing. You paid 0 points to buy it down, to take that interest rate. But you can also, you would say, well, what if I want a 2% interest rate?
You can change, you can change your interest rate?
Yes. There are so many different interest rates.
This is what points do?
Yes.
What?
And you can choose to pay money to get a lower rate. So the basic thing that I talk to my clients about are, how long are you going to live in the home, and will you make that money back? It's a mathematical equation, right? It's if you're going to pay, which is, so say your loan amount is $400,000, and you pay 1 point to get down to a 2.5 interest rate.
And how much would that be?
So that would be $4,000 because 1 point is 1% of your loan amount.
I mean, over time, wouldn't that be well worth it?
In some cases. I am someone that, obviously the market changes a lot, right? And obviously at an all-time low with interest rates, this might be the right time to actually pay points as long as you're gonna live in that home and have it for that long. And you're gonna have it for that long. So if you're paying $4,000 to save $50, that is exact, to save $50 a month, then you're looking at 80 months to make your money back. Is that right? Yes.
You're asking the wrong person.
Exactly. I almost pulled out my calculator.
Yeah.
So if you're paying $4,000 to save $50 a month, it takes you 80 months to make that money back. If you're going to, which is what? 72 months is 6 years, so 6 years, 8 months.
Okay.
If you're gonna live in your house for 15 years, that might be worth it. My opinion is I'd like you to make your money back within 4 to 5 years.
Yeah.
But some people, again, I'm here to tailor the loan any way that you would like. So it has to make sense for you.
Wow.
So you're seeing a lot of people do that now. Because when you pay the money, you're not paying it cash out of your pocket. It goes into your loan amount. So if you have a $400,000 loan and you paid the $4,000 in points, your loan amount would go up $4,000 higher than someone that didn't pay that point, that 1%.
Oh, so they just tack it on?
They just tack it onto your loan.
Oh.
Right. So.
Oh, this is as exciting as I hoped it would be, learning about points.
Right. And again, going back to fee structure and finding the best mortgage for yourself and finding the best lender. My 2.5 rate at 1 point, someone else might charge you 3 points. And again, so now we're talking about 3%. So mine is 4,000 to get the 2.5, but theirs is 12,000 to get the 2.5.
And that depends on the lender.
And that depends on the lender because it depends on how much money they're making.
Again, another really important question to ask when you're shopping for a lender.
And it's exactly why you should shop.
Write that down.
And why you should compare loan estimates and get with someone that you trust and feel comfortable, because that's a lot of money to lose. Now, even go with lower loan amounts, right? 100,000. 1 point is $1,000. But when you have a $100,000 mortgage, $1,000 is a lot of money.
Right.
So you just, it's all relative. You know what I mean? There's no loan amount that it doesn't change. It's just because 1 point is of your loan amount, 1% of your loan amount, it's still a big deal to you because if you only owe 100,000, 1,000, your payment's only $600 a month,
Right.
$400 a month. $1,000 is a lot of money.
Well, is this something that you wait for your client to ask you about, or do you usually bring this to the table? Like, this is an option for
Great
you?
question. I go over it immediately. Actually,
No one did that with us.
Right.
Here I am. What's the point?
One of our disclosures, actually, and again, I only lend in California,
Yeah.
so I don't know the rules in every state,
Okay,
right?
yeah.
But in California, we have a rule that we have to show a disclosure that shows they have 3 options. We show the option of 0 points, we show an option of paying down, and then there's also, mind blown, there's also an option to where we will actually cover all of your closing costs or cover some of the closing costs for you. So you can take a higher interest rate than what the going rate is, and the bank will cover those closing costs for you. So if you're purchasing a home for $400,000, or your loan amount's $400,000,
Yeah.
and say you want to put 5% down, which is $20,000, but say you don't have $28,000 to cover the closing costs.
Yeah.
You could actually, if the going rate is 2.75%,
Right.
you could take a 3.25 and they will cover the $8,000 for you in closing costs. So all you have to bring to the table is the
Long term, that's incentive to the bank or the lender, right?
It is.
But if you don't have the cash, it's incentive to the buyer.
Exactly. And in those cases, it's a win-win situation, right?
Right.
It's you took a higher interest rate that you can't afford monthly. You just didn't have the $8,000 to cover the other closing costs. So you could either have waited 6-7 months to save the other $8,000,
Yeah.
or you could buy now, get into your home that you like, and have the bank cover the closing costs for
So
you.
important that we can understand all of these options that are available to us.
Right. And as you just stated, your lender didn't go over them with you.
No.
If they're not going over them with you, then they're doing you a disservice. And that's the key to having the right relationship, being able to know the right questions. But at the same point, your loan officer should know this, and he should be comfortable sharing that, because we don't make any difference. I don't make any difference in money
Right.
on you choosing your interest rate.
And giving us information.
Exactly. I'm just trying to provide you with the most information,
Yeah.
so you can make the best decision. And to me, that's anything we do in life, right? If that's playing sports, if that's going to school, you want someone to give you the right information so you come out knowledgeable and you know. And
Because
when
sometimes
you're
you just feel like people are hurrying you along to make decisions so that they can just move on to the next person. And so, yeah, again, it's coming back to finding the right lender, somebody that you trust, somebody that's communicating with you and giving you all your options. And we're learning on the show how to look for that. And that's so important. I wish I had known this a year ago.
And that's the key is, one of my biggest things that I think about when I'm working with my clients is I'm not afraid to lose the business. I want to give you all the information. I might not be the right fit. I might not have the best loan for you. I might, but my job is to inform you so you feel comfortable with me. I'm not here to do your loan one time. I want to do it several times when it's the right time, right? I want you to refer me your business. I want you to call your clients and go, this guy I trust.
Your reputation.
Exactly.
Yeah.
Like he's giving me all the answers. And
people are
good or
always
bad.
going to be buying houses. So
Exactly.
you'll get another client as well, where it might be a better fit that time. Or...
Exactly.
All right. Can we circle back to another question that I have? What is APR? How does that work? And why does everyone talk in abbreviation?
So APR is annual percentage rate.
Okay.
I actually love it. The reason why it came about, where you have banks, you have brokers that are making more money on the deal, and they want to know the fees, right? They want to know what are you paying to get that interest rate. You have an interest rate, which is what you pay on monthly. So 2.75 on the 30-year fix is the going rate right now.
Right.
But your APR is with your fees involved, right? Is included.
I see. Okay.
And it's a calculation, that they break down that, and it's for you. It jumps off the page. For instance, if you got a 2.75 interest rate, but it says your APR is 3.75, you paid a lot of money. So, and you should be worried.
Yeah.
Your APR should be very close to your interest rate.
Okay.
Unless you're in a situation where you know that you're paying points, because those points are also included in that APR. But if you're working with a loan officer and he says, hey, you're not paying any points, but your APR is a half a point higher, run. You know what I mean? Like
Yeah.
it doesn't make sense.
Okay.
So that's how that works. And I think that's the easiest way. You know, it's a very tough question to answer. It's the first thing that people bring up all the time is, what's my APR? What's my APR?
Yeah.
And, you know, when we go into answering it, it's like, here, this is what that number is. And that's what when you're shopping around, that's what you should compare.
So that's a very
It's
important
very, very
number to
important.
have.
Very important. Yeah.
Okay, I've been wondering this.
But do not confuse, you are not paying your mortgage based off your APR. That is included into your fees. But it's
see.
not what you're paying your mortgage on. Your mortgage rate is what you pay.
But
the
you
monthly
need to know
payment on.
both.
But you need to know both.
Got it. Thank you for tuning in to another episode of Mortgage Q&A with AJ. Tune in next week as we talk about down payment assistance.